Hey, good morning. Let's go over today's trade plan. So in the overnight session, for the most part, ES has been bouncing within a range, and at this point, the market can make a directional push really either way. So off the open, we're going to keep an eye on 2058 to 60, and we're going to use that as the micro bull bear zone to establish our very short-term directional bias. As long as ES is holding above that area, it could be setting up for a retest of the overnight high at 65 quarter to 67 quarter, and potentially an upside break for a test of 72 half to 75, with potential to even test 79 to 80 if there's enough upside momentum behind the move. But at the same time, we have to keep in mind that ES broke below a multi-day balance, and the first test of the resistance zones on the upside can still result in rotation. So a breakout above 67 quarter would bring 72 half to 75 into play, but that's still an area where we could get some responsive selling on first test. And then once we work through that area, the next spot would be 79 to 80. And again, first test could result in some level of rotation and get some responsive sellers active in the market. On the downside, a break and hold below 58 to 60 would bring the gap fill at 53 half into play, and then the low at 50.75 to 52.75, the initial support zone, and that's a spot where buyers can be active on first test, but holding below 58 to 60 would tell us that short term the sellers are still being more dominant, so we do have to be cautious at 50.75 to 52.75. It's not like this automatic long setup if the market goes down there, because at that point ES would be breaking below the overnight balance, and the momentum and the short-term control would be in direction of sellers or in favor of sellers. So we'll have to be a bit cautious if the market does end up going down to the initial support zone, because at that point we could actually break below initial support and test some of these lower zones. And as far as how low ES goes below 50.75, that's something that we will have to gauge in real time to see just how weak really the market is, what type of momentum we're seeing on the downside. So keep an eye on the NYC tick, look at the price action. Are we getting wide range bars as the market's heading lower? If so, then we could be going down to 44 to 46, maybe even down towards 37.75 to 39.75. And also look at, if it's happening on rising volume. If that's the case, then, there can be a deeper pullback that could be in play. So at this point, if we are going to reverse and go back up, then ideally we hold the micro bull bear zone. But if we break it, buyers can still defend the initial support, but we would have to get back above 58 to 60 in order to confirm that the buyers are back in control. So on the downside, if initial support holds and then we go back above 58 to 60, then that could lead to a extended move to the upside, because at that point we will have tested initial support, we will have found buyers there, micro bull bear zone would have been held again. So if we hold here and then go back above 58 to 60, then you want to be careful. On the short side, if we continue to hold 58 to 60 and the market ends up being quite resilient here, then again that upside scenario could still come into play, and the market can make a move back up to 72 half to 75, and potentially 79 to 80. And these are still areas where sellers can be active on first test, and we can still technically get short setups up here. But that's something again we'll have to see in real time, just to see the type of reaction we're getting at these zones. If the market goes up here and just kind of starts bouncing a bit, and there's not a decent rejection, then again we could just be consolidating and then just resting for a continuation higher. If the sellers are really going to press at any of these zones above, then it should be a pretty swift rejection. It shouldn't be something that takes hours to play out. It should be something where ES hits it and rejects it pretty quickly. And if it doesn't and starts balancing, then you probably don't want to be involved on the short side up here. That would be a red flag for sellers. So those are the main thoughts heading into the day. It is Friday, last day of the week, and also for that reason, just exercise some caution as we get later into the morning. I think the best trades will be early in the session. We have a couple of econ reports out this morning that can also serve as a short-term catalyst. So I think the best trades are probably going to be in the first, 2 to 3 hours. I think after that things could slow down a bit. So those are the main ideas heading into the day. Let's see how well the buyers hold it up at 58 to 60. That'll give us a good idea on whether they're able to maintain control, and we'll take it from there.